Are you looking for a simple way to pay your mortgage down faster with no added funds? This week on the Saskatchewan Real Estate Podcast, we sit down with Larry Fail with Manulife as he describes maybe Canada's best mortgage product, the Manulife One.
This is the Saskatchewan Real Estate Podcast.
I've been with Manulife for the past 7 years as a broker consultant, looking after Manitoba and Saskatchewan. Prior to Manulife, I spent 32 years with another institution and held various senior roles with a Big Five bank.
Wonderful. Larry, I have to say, a lot of times when a realtor or a client says like, wow, Ron, like you did an amazing job on this, or you really pulled through, a lot of times it's people like you on the back end who are kind of quarterbacking from a lender standpoint and helping us, understand your products a little bit better. So for anyone who's wondering why brokers look so good, it's often to do with people like Larry. So thank you so much for taking the time today, Larry, to explain one of these great products.
Yeah, thanks for the opportunity. I think too, Ron, it's really collaboration at the end of the day. Like I look at yourself, I look at the other brokers in the territory, and it's all about partnership. But I think the bottom line is that we have the best interests of the client at heart. And so when we do work together, it's really all about the client. That's really the bottom line.
And speaking of the best interest, let's hop right into it, Larry. Just walk us through what is the Manulife One and why do you like it as a product?
Manulife One is, through my years, I would say this is probably Canada's most flexible mortgage. It's an all-in-one banking solution that combines your mortgage, your savings and checking account, and your income into really one easy, usable account. It really simplifies your banking needs. And at the end of the day, it simplifies your life with reference to banking.
Mm-hmm. Now, when speaking specifically to paying off your mortgage faster, how does the Manulife One assist in that?
Well, there's a couple things it can do for you, like in terms of paying your mortgage down. Most clients, when they look at their mortgage, they typically look at the rate and they kind of assume the rate is kind of be all end all. But when you look at Manulife One and being an all-in-one banking account, there's really two components, and it's really your payroll that goes into your Manulife One that really drives your payment schedule. And so as your payroll gets deposited, those monies automatically pay down your debt so that you don't have to go back into your banking app or online banking and move money around. Because if you're on vacation, you miss a couple of weeks, you've lost a couple of weeks of interest, quite honestly. With Manulife One, if you've got your payroll set up, your money's working for you. So it's automatically going to pay down your debt immediately as soon as those funds hit the account. The other component is that because Manulife One has two components, it's got a HELOC component or a line of credit component, and it's got your fixed rate mortgage. The debt on your HELOC is compounded by simple interest. And so when you do the calculations over the life of the mortgage, depending on how much debt you have in your HELOC, it's going to save you some money. And so you're moving away from how the Big Five banks have trained most Canadians is looking at interest rate. Manulife One's not about the interest rate. You're going to get a super competitive interest rate on your fixed mortgage with us. But when you combine the HELOC component, you've got your payroll going in, it's definitely going to save you money. There's no doubt about it.
So the structure of the mortgage essentially allows for, if I'm understanding it correctly, Larry, a very easy prepayment. Now, because you're transacting in the account, you're using it, a lot of times people are having more income going into the account than they're taking away. And this income going in essentially just helps to bring that mortgage down and essentially cutting down on the amount of time to pay off that loan.
Yeah, so a couple of things there. So, one thing I would encourage most people to look at is go in and run the numbers on our Manulife One calculator. It's really going to shock you. Like when you're doing a straight comparison between your current bank and Manulife, and you're looking at the calculator, it's gonna spit out a Manulife One number, and that's the interest cost savings over the life of the mortgage. And there's two components, and as you mentioned, Ron, as your payroll goes in, so a couple things happen. So case in point, take the example where a typical family might have, net income of $5,000 a month, and all in expenses, let's say it's $4,000 a month coming back out of your checking savings account. If you ask the average Canadian, where's that other $1,000 earmarked after all expenses are paid? Some might look at you and say, not quite sure, but that's the beauty of Manulife One, is that $1,000 automatically pays down your debt. And so as you receive your monthly statements and you see the reduction at 1,000, 1,000, 1,000, and it hasn't been earmarked, that's paying down your debt immediately. So at the end of the day, less interest on your debt. And so people get excited about seeing their statements. And of course, when they see their debt being reduced as quickly as they thought it might be, they find different ways to squeeze more money out of the budget to pay down that debt quicker.
Wonderful. Walk us through, and you're kind of elaborating on it here, but who are ideal clients for a product like this?
That's a great question. For some of the brokers I speak with, certain brokers will have it earmarked for certain types of individuals. I'm a real big believer, quite honestly. Now that I've worked with this program for the last 7 years, it's really for everybody. And when I say that, the only caveat I'll put in is that you have to be a bit focused, you have to be a bit disciplined, but at the end of the day, if you're listening to your client and you're listening to their goals, and because the program is so flexible, is you can structure it so that it meets those families' needs and meets the individual needs based on their goals. So while some people will say that you might get carried away with a line of credit or a HELOC, but you can temper that. You can set it up so the client only has access to maybe 15, 20% of their equity, and everything else is locked in. So as a broker or as an agent, in 5 years that their debt is being reduced when you're sitting with them at renewal. But you want to give your client some flexibility, because if they run into a life event, and one of the questions I typically ask is, Mr. and Mrs. Smith, if you had to write a check today for $10,000, where would you go? Now they might say, Ron, I'd have to go to my bank for an unsecured loan. I'd have to cash in some investments. That's the beauty about having the availability on the HELOC and giving the clients the flexibility. So between the agent, the broker, and the client, if you structure the Manulife One appropriately, based on their goals and their spending habits and their discipline, I really believe it's for everybody.
So you're kind of answering my secondary question to this, but who is this product not for? Now, you're kind of elaborating, Larry, that it can be structured in the sense that maybe you have someone who maybe sees debt or the availability of a home equity line of credit and say, I would like to spend that. There are ways to temper that temptation by maybe limiting the amount of home equity line of credit available. And so that if someone does have an issue with spending credit availability, there's just a way to structure it that works.
Absolutely. And so if you're sitting with your clients and, their goals, let's say for an example, our example today, their goals is to, interest costs are important to them. Their goals over the next 5, 6, 7 years is to really prepay their debt, pay down that mortgage, accelerate their payments, all that kind of stuff that we normally talk about. Then you can structure that Manulife One so they have the capability of really meeting their goals. If the clients tell you that, listen, the mortgage, paying down their mortgage is not a high priority for the next 5 years because there's other priorities, then you might structure it accordingly based on that particular goal. So it really depends on what your clients tell you. It really depends on the advice that you're really giving your clients. But if you structure it accordingly, it really meets, I would say, 99.9% of the families and individuals out there.
The Manulife One does have some limitations. Walk us through the minimum requirements that you'd need in order to get a mortgage like this in place, Larry.
Yeah, so the Manulife One, typically we need 20% down. So typically folks come out of their first time home buyers program and say 2, 3 years down the road, and they've gained that equity and their house is appreciated a bit. Then they might come back to you and say, hey, listen, you know what, Ron, you mentioned up front, that Manulife One might be the next step in our evolution with Manulife Bank. Tell me a bit about that particular program. So 20% down. I mean, obviously, when we look at good solid credit, so beacons is really important. Cash flow is important too, right? So really, the same requirements that most lenders will look at, but the 20% is really important. And then really explain it to the clients that I think the concept with Manulife One, and not to complicate it, but it's really an all-inclusive banking account, and your mortgage is embedded in there. So if clients are, the way most big banks have Canadians trained these days is that you've got your mortgage and your bank account separate. Manulife One, they're all interfaced. And so you're living out of your banking account at the end of the day. And the clients that we deal with, they'll come back and the testimonials have been super positive. They love the fact that it's flexible, it's efficient, they're saving money, and more importantly, they're independent. They do not have to go back to a bank if they manage the program appropriately.
Wonderful. If people are looking for extra details on this, are there any other resources that you can point them to, Larry?
Yeah, absolutely. First of all, see your broker, right? Second of all, you know what? Go to our website, www.manulifebank.ca. And the left-hand tab, just click on mortgages. It'll take you through all the different various Manulife One programs. And that's the other part I wanted to mention, Ron, is that when we talk about Manulife One, we've got Manulife One for about 5 different programs. All right. And so it does meet every client's needs out there, just not your standard Manulife One. We've got an investment program. We've got an equity advantage program. We've got a program for folks that are self-employed out there that want the flexibility of having that HELOC and managing their own cash flow. So there is a program for every family out there.
Wonderful. Larry, that kind of wraps up talking about the Manulife One. Is there anything that we haven't touched on this program that you think is really important for people to know?
The only thing I'll say is spend some good time with your broker agent and just looking at some of the values and some of the benefits. There's some great marketing material that you can get access to through your broker. There's great YouTube videos on the concept itself. There's some great literature on that manulifebank.ca website. And so there's some great little snippets in terms of overviews that'll really introduce the concept to you so that you can sort of do the comparison between where you're coming from and really where you're going with Manulife Bank.
Wonderful. To wrap it up here, Larry, I ask everyone who comes on this question, if you could go back and give young Larry Fail a piece of advice, what would that advice be?
The best piece of advice I would say when I look back is we never had agents or brokers that we could go to for advice and expertise. And so most of us relied on our banker at the end of the day for that one piece of advice. But, because Canadians have options now and they've got brokers and agents out there, I would say go in and really seriously spend some time with your broker, but ask for the advice based on your goals and those solutions so you've got some options. And that's the best advice that we give people today.
Wonderful. Larry, thank you so much for coming on. As I said at the beginning, the BDMs, the underwriters at our broker lenders are the ones who help brokers look really good. So thank you for being a great broker partner. And if people are looking for more information on this, I'd encourage you to reach out and ask those questions. If you're asking me a question and I don't have the answer right away, Larry's the guy that I follow up with and get those answers. So thank you so much for coming on today, Larry. We really appreciate it.
Yeah, thanks for the opportunity and thanks for your time.
Thanks for checking out this episode of the Saskatchewan Real Estate Podcast. I hope you liked it, found some value here. If you did, please hit the like and subscribe button. 2 things before you go. Number 1, if you'd like the chance to win your mortgage payment, simply recommend me as a mortgage broker. The person you recommend, if I do a discovery call with them, you can win up to $2,500 for a win your mortgage payment or to cover off your rent. Simply recommend me as a mortgage broker and you're entered into the draw. Secondly, the Saskatchewan Real Estate Podcast is teaming up with the Saskatchewan Realtors Association as they host the State of Real Estate coming up in September. If you'd like a discount on your ticket, come say hi to me at the event. Simply enter promo code RON10 when you're buying your ticket, and we'll see you there. Until next week, I'm Ron Caroni, your Saskatchewan mortgage professional. Bye for now.